Hello, I'm Tom Zacharias with the National Crop Insurance Services. Let's look at the success of the crop insurance program and the benefit that has had for the American taxpayer. Let's look at crop insurance by the numbers. Over the last decade, overall taxpayer spending on farm policy as a whole has steadily declined. That's no accident. Commodity prices have strengthened and America began shifting to an insurance system that reduced the need for traditional subsidies and limited taxpayer risk exposure. From the period 1998 to 2012, insured acreage has increased by 100 million acres. Huge increase in participation. It became such a success that most farmers agreed in 2012 to get rid of direct payments during the Farm Bill debate. But it's not just direct payments that private sector delivered crop insurance will ultimately displace. Crop insurance has eliminated the need for costly ad hoc disaster bills. Since 1989, 42 pieces of legislation totaling $70 billion in unbudgeted dollars were passed to help farmers following a disaster. Those days are over. Farmers and private insurance companies now share in the risk. They put their dollars into a system so that the burden doesn't fall entirely on the taxpayers. Here's how. Farmers pay for a portion of individualized insurance policies. When disasters occur, billions in farmer-paid premiums help offset the cost of assistance. And because policies have deductibles, farmers also shoulder a sizable part of their losses. Farmers have paid $30 billion of their own money on crop insurance protection to buy this coverage. In other words, farmers have skin in the game. We've also observed with this premium $4 billion in underwriting gains for the government from the period 2001 to 2010, which have helped offset losses incurred after devastating floods in 2011 and the drought in 2012. As a result of the standard reinsurance renegotiation and the 2008 Farm Bill, there's been a $12 billion reduction in crop insurance funding, which is a benefit to the taxpayer. Of course, the government isn't alone in backing losses when disaster does strike. Insurance companies shoulder risk as well. After last year's drought, for example, companies will see heavy losses that otherwise would have fallen to taxpayers. That's not to say there's no taxpayer cost in crop insurance. There is. The Congressional Budget Office projects costs of $9 billion a year moving forward, but those costs are lower than the cost of past farm policies, which centered on direct payments and ad hoc disaster. Should also be noted that crop insurers have stood alone in offering up budget reductions in recent years. In 2008 and again in 2010, the crop insurance funding was cut by a total of $12 billion. Unfortunately, some in Congress are angling for more, and the additional cuts they are proposing would result in lower crop insurance participation. Ironically, that would simply shift risk away from farmers and insurance companies and right back to taxpayers. That's a bad deal for farmers and for taxpayers. As we go forward in the next Farm Bill, we would say, do no harm to crop insurance.